If you're worried what tumbling markets are going to do to your favorite tech stocks, this is the video for you. I'm going to walk you through why it's tumbling, what isn't tumbling, where the opportunity sits, and we're going to look at the big stocks, the NVIDIAs, the Palantirs, the SoFis, and the so on. So let's jump straight into it. NVIDIA has just tanked. Not just below this yellow line here. My yellow lines are always the 50-day moving average line. But you can also see it's dropped below its institutional support at 167.50, which is that green line here in Trade Vision. It's an indicator you'll only get in Trade Vision as a trial down below if you want to get access to our data. And that's not good. And it opens up a potentially larger drawdown to the next sort of support level, which really is sitting at around $140. Doesn't have to go that low, but I'm just saying that's what it is. Now, when you then look at the NASDAQ at the same time, again, same indicators, support, resistance, 50-day moving average line in yellow, well, the NASDAQ hasn't dropped that much. And when the biggest constituent of the NASDAQ, the thing that moves the market, drops significantly and the NASDAQ doesn't, two explanations. One, the broader market is actually holding up all right. And two, the NASDAQ's about to drop. And that's not what you want to hear. But traditionally, NVIDIA has been the market leader for the NASDAQ. So be a little bit careful with that, a little bit cautious. Support will sit at 560. You can see that here, 560. At the moment we're at 574. So $14 lower is where that sits, and that's an important support line. Now, there's also a little bit more data we actually need to look at, and that's not actually beautiful news. And there's not a doom and gloom video. There are opportunities. I'm going to walk you through those. But buybacks have been one of the things that really held up the market. We're getting somewhere between $2 to $4.5 billion a day of companies buying their own stock. That is the biggest buyer of stocks out there by none, and they are going into, well, from mid-September, they're going basically on holiday. Why does that happen? When companies start reporting their earnings, they've got some period where they can't buy their own shares. So that is not good because it takes away the biggest buyer we have out there. So again, we might get a little bit more volatility. It's a polite way of going, right? And then you've got the VIX here on the chart in red. That's the VIX now. And excuse my handwriting as I'm on a laptop and a mouse. No pen here today. And that gray line is what typically happens every single year since 1990, which would imply that the VIX would go significantly higher, about 40% higher than it is right now. Now, what happens when the VIX goes 40% higher? Put in the comments down below if you know what I'm talking about. It's the fear index. More fear, generally worse stock market. So not brilliant as a setup, which is why I was warning about September. But there are beautiful things happening in September, which are making us money, which is absolutely fantastic. As they say in France, gold. Gold is continuing its bull run beyond anything. The GLD ETF sits at $331 right now. The individual gold miners, I think, are probably doing a little bit better, which is what I typically buy. And yeah, they've recovered from the little mini dip there, and they had a good day yesterday, up 6.6%. And secondly, and again, I've been talking about this for 2 weeks, so it's not in hindsight. Go back to the channel, home builders. The exciting, sexy, AI-driven industry of home builders. There's nothing to do with AI. It's got everything to do with interest rates. And it's got everything to do with money pouring into home builders. Because zoom out of the home builder chart and you'll see a pattern. Now, you might be wondering, patterns, what are you talking about, Felix? Well, this is the stuff that I look at and that I believe makes me the most money. So we get a bottoming out happening here. We then get a stock that starts to consolidate sideways, breaks a little higher, consolidates sideways. So we had 2 entry points for this here, depending on risk setup. And now with jobs data coming in pretty hideously, we're going to get rate cuts. Now, what is the biggest factor when you're buying a home? How much home can you afford? How much home can you afford? Well, it depends largely on interest rates. When interest rates drop a percentage point, your mortgage gets significantly cheaper, and therefore you feel like you should be buying a lot more homes, so you continue to be a 30-year mortgage slave to your bank. They call it recurring revenue. They like it. That's a whole another conversation about very long mortgages. But is it too late? I personally don't think so. No, I think it's actually probably just about right. And there are a couple of home builders that I've got right now, if I'm not mistaken. This is one of them, I think, for example, Toll Brothers, which is just continuing to go up and up and up and up and up, which is a rather nice thing. but it's nowhere near its December, November highs, and we were expecting more rate cuts, and then they didn't come for some sort of reason. But it's a cyclical thing, right? So you don't want to hold home builders through the down cycle as interest rates go up. So this is sort of a following the money, and that's what we're doing. So the money is leaving AI and chips, and it's going into safer place that make a lot more sense right now. So if you want to understand how to follow that money, I'm going to run a live training for you on that, which will be Tuesday, I think, felixprehn.org/training, and you can get yourself a free seat to that, and it'll be fun. Now, I warn you, I'm going to motivate you. I'm not just going to give you rules, because from the 20,000 people I've taught, I know that unless I motivate you, the rules will go in one ear, will go out the other ear, and you absolutely bugger all with it. Whereas if I actually motivate you first, shake you up a bit, hang you out of the window upside down, then you're going to be like, brilliant. Don't worry, there won't be any hanging out of windows. Although yesterday somebody told me something rather disturbing about, never mind, some military chap about hanging people out of windows, but helicopters, actually, never mind. Let's move swiftly on that subject. I didn't know anything about that. So let's have a quick look at some of our favorite big tech names here, and I'm going to just chuck them out there in the order I think of them, and we'll put some timestamps down below. Palantir. Palantir is doing what? Well, if you zoom out a little bit, it's not the cleanest in the world, but I think an argument could be made that this is a middle finger. No, it's a head. What's going on in your, it's not what you think. It's filthy minds out there. It's a head and shoulder, head, shoulder. It is not a pretty pattern. It is one of those things, one of the few patterns I actually look at, which isn't a good thing. And then typically you have two armpits. One's here, one's arguably there. When you drop below that armpit, which sits at about $150, which coincidentally is also exactly where institutions are positioned to sell. Real coincidence that, right? $150 there, the support. Again, get yourself that support indicator from TradeVision, one of the most glorious things we ever calculated. You drop below that, bad things happen. Floors sort of open up and you fall into shark-infested, flame, boiling hot water sort of type thing, if that were possible. So it doesn't have to happen. It's a tremendous business, but if the little bit more steam goes out of the AI thing and we get a bit more selling off and there, a bit more fear and panic, sort of generally speaking, it's a possibility. Which, quite frankly, with Palantir will probably open up an opportunity a little bit later down the road. But we are right now below this yellow line here, which for traders is the 50-day moving average line. It's sort of your God line, the chosen line. And you drop below that chosen line, and bad things tend to happen. And you might want to set a stop. Now, where do you want to set the stop? Well, somewhere below these recent lows here, I would suggest, because we might, of course, continue to go sideways a little bit and then continue. Now, what about something like fintech? Fintech should traditionally benefit from low interest rates, but you get lots of people unemployed and the economy generally worsening, then people don't pay their loans, which isn't quite so good for the fintech sector. Now, SoFi is actually quite good because they have pretty high income, high credit score users, and they've also sold a lot of their loan book off, which means somebody else's problem, which is how banking works. So stock's going sideways, not really doing very much. Yesterday was a good red candle. What do I mean by that? You see that candle there? What does that look like? What does that red candle remind you of? A hammer, perhaps, yes? For those of you, more sort of DIY. Do you use the word DIY in the US? I don't think you do you? I think that's a British thing. It basically means you do stuff yourself, which I don't. But probably not a good idea, really. I'd probably just nail my hand to the wall, I think. Now, so it's a decent setup, but it isn't one that we're screaming, oh my God, this looks absolutely wonderful. We also have note high, slightly lower every day. So there's a little bit of steam coming out of the whole kind of tech innovation sort of type sector. And I did a video last week, and I'll link to it at the end, about cycles. I think it's a very important thing to understand and learn. And one of the things I put in there was that ARK is actually quite a good indicator. ARK K, because ARK K is basically all the loony innovation things that tend to be in there, the high risk stuff. And watch that for market sentiment. And at the moment, it's sort of plateauing out. on a slight downward trend. Still looking decent because it's broadly going sideways rather than down, but a little bit of an early warning there. Although having said that, theory, if rates go down lower, significantly lower, and the economy doesn't implode because of, well, tax cuts and government support and so on, then this could actually be a brilliant setup. But we're going to wait for that setup to break out, and more on that again in the live training, felixprehn.org/training. Any other stocks that matter? Anything else at all? We look at. I hear Archer in the sort of requests. That keeps going lower. And I did put a video out yesterday on drones. I think it's a tremendous opportunity if you want to understand that timing. Watch the drone video. But right now, this is not something that I would touch with a 100-foot barge pole, because it's below not just the 50-day moving average line, the yellow line. It's below the 150-day moving average line, which is the purple line. It's below support. So it's not looking particularly pretty. Now, let me consult my watch list so that I will actually remember some of the top stocks out there, and we'll pick a few. Google. Oh, yes. Google's a good one. Google's had a tremendous rally up, big win in the US legally, and then $3.5 billion fine from the apparatchiks in Brussels, in Europe, who say, you are a dominant player and we don't like you, and therefore we're going to fine you. Now, of course, the Europeans have given up their entire tech stack to the US. They don't even try, quite frankly, which isn't all that smart, but this isn't really going to help anybody. So neither here nor there. We are going to see Google work with Apple, which is going to be very, very good for Google, because it means Apple's AI runs on Google. Apple stock, for some reason, is also up on that news, which might not be a bad thing. So that's one of the things that's holding the market up, actually. It's Apple, whereas Netflix, obviously, it's not Netflix, NVIDIA is dropping. What about Tesla? Elon's pay package deal is out, and you can get all the news in here as well, by the way. Tesla unveils master plan 4, emphasizing AI, robotics, signaling future growth. It supports the stock and so on. And you can click on show more, and you get a lot more detail on how that's broken down. I'm already getting these as news alerts on my phone, which is very cool. I'd show you my phone, but I'm recording from my phone, which is very, very useful. So that's going to be rolled out soon to everybody else as well. So what are you seeing in Tesla? You're seeing actually a really nice textbook sort of sideways exhaustion pattern. Now, exhaustion patterns, eventually, if you've ever been exhausted, you climbed up a mountain, bit exhausted, sit at the top, you have a snack, cup of coffee, scratch your golden retriever behind the ears, and then half an hour later, you're like, yay, let's go. And that's exactly what happens with stocks. Now, the longer these sideways actions go, the stronger typically the actual breakout. So at the moment, 350, here 350, the resistance there, is where it's at. So a significant breakthrough above 350, ideally accompanied by some bigly volume, which would mean institutions buying, is a very, very good thing. So I think it's going to break out. I just don't know when. So do I buy it before it breaks out? No. I buy it the moment it breaks out. And again, we can talk about automations for that if you join me on Tuesday. That's at felixprehn.org/training. Let's pick one or two of the other ones here. AMD, for example, how's that faring? Well, not any better. And my feeling is that AMD tends to get punished a little harder than NVIDIA because it's the laggard. It's the second favorite. It is not the chosen son. It is the second favorite son. So if you're mad with the first one, you're a little bit madder with the second one. That's sort of my theory there. United Health, healthcare sector, still consolidating. And this is what happens, by the way, usually when you get in a little early. We got in very early here somewhere. I can't remember where, to be honest with you, but somewhere around that level, 290, I think, if I'm not mistaken. And now we're doing our little sideways dance. So that might take a little while. But to me, this is actually an opportunity. I'm not telling you to buy it. I'm just saying it's an opportunity, but it's a very early opportunity. The real opportunity will sit up here at about 385. And there's nothing wrong with paying $70 more for a stock for a higher likelihood of it going up than being a gambler. A gambler rarely pays off. So there is that. What else we got? We've got Amazon, which is actually looking pretty good. And if Bezos ever stops selling billions and billions and dollars of stock because he's, I don't know, scheming to take over the world or something, then this thing will actually perform tremendously well, in my humble opinion. But right now, it is doing what? Well, watch the pattern. what is it doing? It's going absolutely nowhere sideways, on a slight upward trajectory. And that's a good thing. So you want to break out of that to this direction, break above the 250 institutional resistance, and then again, Bob's potentially your uncle. But right now, I'm not buying any Amazon. We're looking at more boring and, these kind of stocks. DHI, D.R Horton. That's the sort of stuff where I see a lot of opportunity right now. Whereas with tech, I'd be very careful. Look very, very carefully what you have in your portfolio and how it performed last week. The stuff that reacted very, very badly to last week is the vulnerable stuff. And then I'd look very, very hard at quality. Like, what's the quality of the stuff? And I'd move more towards quality. And I'd also look at some of these sectors that I think are actually going to do tremendously well. But if you don't quite understand yet how the money flows from sector to sector, because it isn't just sort of a random, this happens every 2 years thing. There is a telltale. You can look at the chart and it'll tell you. So you don't need to be a genius for it at all. You just need to know where to look. Once you know where to look, I think your eyes open up and beautiful, tremendous things happen. So I hope this is valuable for you. If it is, let me know down below in the comments. And if you want to be able to come to conclusions, have better risk management, actually know when to take profits, and feel confident about what you're buying and how you're buying it and when you're buying it, then learn. And you can learn this from me on Tuesday, felixprehn.com/training. It's a free 90-minute, 2-hour session. As I say, I do warn you, I will spend a fair bit of time on mindset and motivation, because from the 20,000 students we've taught, I know that without that, the information is entirely useless. I would say you can put all of the information, all of the rules, and you could broadcast it, and nobody would get any richer, because nobody would really understand why they should be doing anything with it. So we'll do that, and that'll be tremendous fun. I enjoy it. And as you can see, I'm still in Kuala Lumpur. It's quite a distinctive building up there where Tom Cruise hangs off somewhere. And I wish you a beautiful weekend. Don't sweat the market. If you are stressed about the portfolio and your retirement and your money, that's a very good thing. We just got to use that to motivate you to actually get better at the thing that you're doing. You're probably quite good at making money. You're probably quite competent at the job or the business that you are in. And why is that? Because you learned. But with money, you're just sort of like, just throw some here, throw some there, see what happens. And if it goes well, you take credit. If it doesn't, we typically say it was somehow manipulated. And that's just an indicator that we can up-level our skills on that front, like on any front. It's not rocket science. It isn't particularly difficult. It isn't particularly time-consuming. It's just a question of, are we motivated enough to learn it? And all I can say from my perspective is that understanding it gives you tremendous peace of mind, and it gives you potentially a tremendous opportunity to live a much, much nicer life. So felixprehn.com/training, and I look forward to seeing you there. Take care. Are you worried you're going to get caught out by the market crash that will inevitably come because the market moves in patterns? Well, that's what Hugh just told me to watch out for. And in all seriousness, there is actually a structure to predict the market patterns that happens with 90% accuracy. And I want to walk you through that.